Be Wealthy and Smart, episode 723.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about big opportunities for wealth building. And that's because there are so many extreme swings that I'm seeing in the markets this year that it's going to be an opportunity to build a lot of wealth if you understand what's going on and make the right moves at the right time. Now, I'm typically not a market timer at all. I'm typically a buy and hold investor. I'm typically one who likes to find bargains and buy good stocks or good indexes and hang on to them for a long time. And for most of my life, that's really worked. But there have been some times where there are extreme moves in the market where, well, it just doesn't work that well. For example, in the run-up to 1998, 1999, into the highs of 2000, there were tremendous amounts of money made in the stock market. But for people who tried to buy and hold, for the next 2 years, the stock market declined, and the tech stocks went down over 70%. So you see, sometimes you can't just buy and hold. Sometimes you have to be really aware of what's going on and why it's going on, and make some savvy moves at the right time that can really help your wealth building. So that's what I want to talk about today. So first of all, again, I want to say this is not a regular year for the stock market. This is a year when multiple cycles are coming together and there's going to be extremes in one direction and then another. The money is going to be sloshing from one place here and then out of that place like crazy. And so that's why you have to pay more attention than ever this year. You have to really be keeping up with the news and with what's going on, and you can't just set it and forget it. So I want you to be more tactical this year. I'm not talking about being a day trader. I'm not talking about even trading weekly or monthly. I'm just talking about being aware of market extremes, because we are going to have incredible market extremes. For example, we might go to all-time new highs in the stock market, but we might also have a 1929 style crash. We might go to all-time highs with the US dollar, but we might also see the dollar crash. We might go to multi-year lows in the price of gold before gold starts to skyrocket. So you see, we're going to experience massive extremes from one direction to another as sentiment changes and as people realize what's really going on with the economy. You see, right now I've been talking about how we're in the chasm. We're in this time where companies have been shut down, the whole economy has been shut down. In fact, the planet has been shut down. And so people are trying to figure out, when is everything going to be open? How are we going to come back? When are people going to be comfortable eating at restaurants and flying and traveling again? And with these phase-in requirements, it's going to be slower than we think, in my opinion. I know I don't really want to run out to a restaurant and wear a face mask and be in a restaurant with maybe 1/3 the people that were there or 1/2 the people that were there and not have a great dining experience like I used to have. I'm not in a hurry to experience that, so I might just stay at home and wait it out a while longer. Well, that's not good news for the restaurants. The restaurants want to get back open, they want to get their restaurants eventually full, and they need that in order to make the level of profits that they need to stay in business. But that might not be reality right now. To just open up as a restaurant, they're going to have to cut back the number of tables and take health precautions. And while that's good for the health side, it's not so good for the return to business side. So you see, when we're looking at how fast the economy is going to come back, well, I just think it's going to be slower than what we think. So while we're in this chasm, we're in this period of time where companies literally cannot tell us what their future sales are going to be. They have no idea. They don't know how soon they're going to fill up airplanes again. They don't know how soon people are going to want to travel for business or for pleasure again. And now we're coming up on the summer months when normally people would be traveling more for vacations and holidays. And, well, are they going to do that? I don't know if people are going to feel comfortable with that. So while we're in this period of not having the economy fully open again and we're in this chasm, we also are in fantasy land, because in fantasy land, that means we don't know what a company's stock should really be selling for. We don't know whether it should be higher or lower, or whether the price today is the right price. But here's what we do know, and this is very sobering. If we were to take today's earnings, the earnings that we're actually making right now, that companies are actually declaring that are their earnings, if we were to revalue the market where today's earnings are, it would take us back to 2009 levels. Much, much lower than where we are today. That's why I call right now fantasy land, because we're not in reality. And we're not in reality because we also know that there's recovery ahead. So why should we go down to those lows right now when we know things are going to be getting better? So we're in this fantasy land time. We're also in a time where everything's reopening, where things are going to be getting better, where revenues are going to be increasing. But I also think we're coming into a time here very shortly where we're going to have some bad news for real estate and bad news for the banking system. The bad news for real estate is starting to happen because news is slowly starting to leak out that 15% of homeowners have not paid their mortgages. We also have commercial real estate in a real pickle because we have people who were going to expand their businesses now deciding to contract their businesses because people are working from home, and that's working out pretty well for a lot of companies. And I've heard multiple businesses who had expansion plans say now they're going to not expand into new space. We also have trouble with retailers. Retailers are not going to be coming back right away either. And so some of the bankruptcies we've seen are in Neiman Marcus, JCPenney, etc., having real troubles with retail. And we're seeing the airlines are having real problems. They have amounts eating away at their cash flow to the tune of $50 million a day, $80-90 million a day in costs to maintain all of the airplanes, their pilots, their flight attendants, etc. And they're going to have to be laying off pilots and flight attendants because fewer people are flying and they're going to need fewer planes, pilots, and flight attendants. So you see, it's going to take longer for us to get back to normal. And during that time, lots of businesses are going to have to contract. So we are in fantasy land as stock prices have been propped up and people have been hoping for the best, hoping for a quick recovery. But I've always said I think this is a W, and that means we have another leg down ahead before we can get moving back in the right direction. Now, it just so happens that as we get into this week, I think we're going to see some bad news with banks and real estate. But once we get to whatever those lows are going to be, from there, whatever these lows are here, probably into early June, I think we will go to new highs. Now, that might sound crazy. Didn't you just say it was going to take longer? Didn't you just say that there were some bad things happening out there? Yes, I did, but I also said we're still in fantasy land. So fantasy land means after this pullback and some of this bad news gets out into the market about banks and real estate, we may even go to negative interest rates. If we see negative interest rates, what are people going to do with their money in the banks? They're not going to pay the banks to keep their money. They're probably going to put their money into the stock market. And some of that money that has been out there as stimulus money, the $10 trillion, which is an enormous amount of money, is going to find its way into the stock market. So from these lows that we're going to find, we're going to move to all-time highs, in my opinion. It's going to feel like the roaring 20s, happy days are here again. People are going to be saying, oh, see, the worst is all behind us. Told you, it's all over. Everything's great. We had a V-shaped recovery. We're off to the races. Not so fast. That's where we start to have real problems and the reality sets in. Because a few months from now, we're going to have real numbers and the fantasy land will end and real reality will set in. And when real reality sets in, that's when the reality of the lower numbers comes into play, and we do have to readjust the stock market lower. That's where we could have a 1929 style crash, and we could see drastic movement toward readjustment of what the market should really be selling for. What could cause that? Well, we could have a spike in interest rates at that time. We could have the debt market start to crash. We could have the dollar go to all-time highs, cratering a lot of emerging market countries. But then the dollar having trouble because of all of the debt that has been issued. And then finally, the dollar crashing and the debt crashing, and a complete reset of the debt and currencies, and probably debt forgiveness. I want to pause for a moment and tell you that LinkedIn Marketing Solutions is the de facto environment for B2B marketers and advertisers to drive brand awareness, generate leads, and build long-term purposeful relationships that result in real business impact. Advertising on LinkedIn's network of more than 575 million members is precise and powerful, with the ability to effectively target the right message to the right people while they're in a professional mindset, resulting in higher quality leads, more website traffic, and higher brand awareness. I know when I want to find somebody who's the expert in the industry, I look on LinkedIn. When it comes to marketing your business, it's all about reaching the right audience at the right time and connecting with them when your message will resonate the most. So if you want to target your customers where they are engaging every day and when they're ready to make a decision, LinkedIn can help you. When you advertise on LinkedIn, the world's largest professional network, you have the opportunity to build long-term relationships with your customers. Relationships that often translate into high-quality leads, website traffic, and higher brand awareness. The first step? Talking to the right audience. With a community of over 575 million professionals on LinkedIn, you have access to a diverse group of people searching for the things they need to grow professionally. LinkedIn has the marketing tools to help you target your customers with precision, down to their job title, company name, and industry. Because better targeting equals a message your customers care about, which in turn leads to more trust built with your customers. In fact, 4 out of 5 customers who are on LinkedIn are decision makers at their companies. So you're building relationships that really matter. And here's a special offer for you. You can redeem a free $100 LinkedIn ad credit and launch your first campaign. Go to linkedin.com/wealthy. That's linkedin.com/wealthy for your free $100 ad credit. Terms and conditions apply. And now back to our podcast. So you see, we have crazy times ahead. We have high highs, we have low lows. We have wild swings that we have not seen in normal years. With those wild swings come the opportunity to make amazing money if you understand what's going on and that this really is all about debt and currency. That's really what this is all about because it's a complete do-over of debt and currencies, but that's going to come later. So here are some of the big opportunities I see in the future. You could see gold crashing before it starts to skyrocket. You could see stocks skyrocket before they crash. You could see the dollar go to all-time highs, and then you could see the dollar and the debt crash and a global reset. These are extremes, and these are some of the wealth building opportunities that are ahead. But you have to understand what to look for. You have to pay attention to what's happening. And you definitely don't want to get caught going in the wrong direction because it could be devastating. So while I don't mean to sound negative, I do mean to sound positive because with extremes comes massive opportunity. But again, you have to understand what's going on and why, and look for the signs and what they're telling you, and be a bit of a contrarian. When you see something at an extreme, well, understand it might go the other direction and it might go extreme in the other direction. Because again, this is not a regular year. This is a multi-year cycle coming together in a very extreme situation. More extreme than 2008, more extreme than the year 2000 even. So what are the areas that I like and which areas should you stay away from? Well, I would stay away from airlines, restaurants, real estate, banks, and retail. Most retail, although some retail will do well, especially online retail and those that are for home improvements, since people will be staying at home more and feathering their nest. And I like biotech, healthcare, home remodeling, cannabis, online businesses and online marketing, stay-at-home type services, and beauty products. One thing I would really recommend is rather than trying to do some stock picking yourself, which I've noticed has been devastating to a lot of people, I would use ETFs. Choose a sector and buy the entire sector rather than trying to buy individual stocks. Number 2, look for the big extremes. When you hear that we are at an extreme high for the stock market or an extreme low for gold or something like that, when you hear we're at an extreme, understand it could be that we're about to move in a direction that's going to be extreme the other way, and there may be an incredible opportunity to be had. Number 3, I would be very cautious about real estate. This is going to be a tough year for real estate. And I know you don't like to hear that because a lot of our assets are in real estate. But I do think that once people see that real estate isn't going to continue going up this year, that more people will put homes on the market and will sell their real estate. Also, there's going to be people that just can't afford to keep the houses because they're not getting the renters that they were. So a lot of those Airbnb homes that people bought and were highly leveraged to buy, they're not going to be able to keep them. And some of those are going to have to be sold. We also have commercial real estate problems coming with more space available than there are people who are expanding into new space. So commercial real estate in particular is going to have a rough time. So hopefully I've made you aware of where some of the opportunities are going to be, where we're going to have higher highs and lower lows. And I've alerted you to why this isn't just another buy and hold year. There will be an opportunity to buy at extreme lows, but it's certainly not now. And that may be why we've seen pros like Warren Buffett not buy yet, because he knows there are extreme lows ahead of us and he's waiting for those times. But in the meantime, you can be tactical and buy into the June lows that would probably take us to all-time highs. I think we are likely to see all-time highs this summer before coming back to reality. We're still in fantasy land, so anything can happen. Now that you're aware of some of the wild swings and why they're going to happen, if you want to have someone guide you through that tactical approach, that's what we do in the VIP experience. There's a short questionnaire in the show notes if you'd like to talk with me about it. Fill that out. We'll set up a time to talk. Or on my homepage, there's a special offer where you can save 50% and have lifetime access right on the homepage at lindapjones.com. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.